Hello again, I'm Chad. Welcome back to your Banking and Credit Toolkit. So far, we've covered bank, checking, and savings accounts and the cool tools that come with them. Today, we will discuss credit cards, why people use them, how they are used, and how they can be both a good thing and a bad thing. By the end of this episode, you'll know all about them. So let's get started. Credit cards are not like the debit cards we talked about in the previous episode, where you can use it to take money out directly from your checking account. When you use a credit card, you are actually borrowing money from the bank or credit card company. There are many credit card companies, such as Visa, MasterCard, and American Express. The great difference is that credit cards have an interest rate on them, since you are using the bank's money. Your debit card does not charge any interest because you are using your own money. Do you remember what an interest rate is? An interest rate means if you use the credit card, you are using the bank's money, and their borrowed money gets paid back with interest. Remember, that's how the banks make money. So, if you have a credit card with a 20% interest rate, that means that you will have to pay back $120 on $100 that you spent, and that can get expensive really quick. 20% is a high rate of interest, which you should try to avoid. Besides making money from interest, bank credit cards charge businesses like toy stores or restaurants a percentage, like 3%, for their use in their stores, which is also how credit card companies make money. So credit cards make money on both ends, charging you, as the buyer, interest, and charging the business, as the seller, a transaction or use fee. When people look for a credit card, they usually look at the different banks that issue them and compare interest rates. This is smart to do because some credit cards have much higher interest rates than others, often around 15% and even over 21%. Some credit cards entice you with points to be used on airlines or in stores. But know that the interest rate is more important than the points. Like debit cards, credit cards are used to buy things, and they are also useful when doing things like renting cars, since many car rental companies will not accept debit cards or checks. Once you get older, you pretty much have to have at least one credit card if you're going to travel. So a credit card can be a valuable tool, especially since many credit cards also offer cashback options, which is a benefit to users. Sometimes you earn a 2% cashback on purchases. So if you spend $100, the credit card company will give you $2 for using their credit card. So if you pay your credit card off on time, you won't have to pay interest. And depending on the credit card company, you can actually get paid by them. But some people overspend on their credit cards and then can't pay the balance. That's when a good tool becomes a bad one. That's because people sometimes do not keep track of their credit card spending. And if they cannot make the monthly payments, they can get hit with big penalties. And if you can't pay back the penalties, the credit card companies will suspend the card. That means that you cannot use it anymore until the balance you owe is paid in full. Often the credit card companies will just cancel the card. That means you can never use the card again even if you do catch up on the payments with the interest. That will also affect your credit score, which is a bad thing. Most credit cards will also have spending limits, say $2,000, $5,000, or more that you can charge. Gold and platinum cards often have no spending limit, but those are hard to get because the credit card company puts a lot of faith in you and they look at your credit score and payment history. Of course, just like you, they want to get paid back when they lend out money. Unless you can pay the balance off every month, the best way to use a credit card is to use it when you need to, such as for an unexpected car repair or something like that. That will give you some help if you do not have enough money in your checking or savings account to cover those expenses right away. You may have to pay interest, but with a car repair, at least you can keep driving to work. So you can earn and pay back the money. But remember that credit cards can also be a bad tool if you use it unwisely. You just have to be smart about using credit cards, and I'm sure you will. In the next episode, we'll discuss credit scores and how they affect you. Until next time.